An increase in the risk hedge level status. Hello, this is Stephen Harris, head trader from Falcon Global, where we model best practices for investors, traders, and day traders from entry to exit every trading day. In this daily video, I provide my opinion and insights of current market trends, market timing, volatility, and hedge risk levels for the upcoming day for the key U.S. financial markets. It is 7:16 a.m. Central Time, and I am recording this in preparation for the market day of April the 1st, 2015. Full disclaimers are at the end of the video, but beware that this is for educational purposes only, and only you are responsible for the investing or trading decisions that you make. So let's dive into the overnight action, and there was some action last night. Quite a bit of weakness, rebounded some. Frankly, you got to take a look at that chart from last night. There was quite a bit of movement. Broad market indices at this point are weak, but certainly not as weak as they were, especially last night. If you look around 6 o'clock Central Time and then 7 o'clock Central Time, there was quite a bit of a dip. You have the S&P down about a third, Russell's roughly scratch, and then the NASDAQ and Dow are both down about 0.25%. Crude oil, another weak night there, down about 0.75%. Euro up about 1.5. You have bonds up about a third, and then gold essentially scratch. In terms of overseas action, China up nicely, up 1.67%. Hong Kong up about 0.75%. Japan going the other direction, down about 1%. Europe actually had a pretty sound evening. Germany was up about 1%, and the United Kingdom about the same. In terms of macroeconomic reports for today, there's a pretty good slate. We have non-farm employment change, the ADP report, another FOMC member. I think we've got an FOMC member speaking every day of this week. You have ISM manufacturing after the market opens, and a couple yellow flag reports. We have crude oil inventory, of course. It is Wednesday. Another FOMC member speaking. And let's see if there's anything else. Nothing else there. In terms of tomorrow, and remember we have a shortened week this week. There's no cash trading on Friday for the Good Friday holiday. You have factory orders on Thursday, and that is during the market, and then natural gas storage, and of course the weekly unemployment claims prior to the market opening. So that takes you through Thursday. Let's see here. In terms of our volatility report, obviously we continue with this ranging activity. A lot of weakness yesterday, and yet at the same time, and we've seen this in the past. We saw this early last year, where you have a lot of, in quotes, price volatility, and yet not being reflected in the VIX. The VIX really is very, very calm considering how much real price movement there has been, and that's because there's not a lot of fear. People aren't loading up on puts. They just look at this as it's just chattering back and forth and range not going anywhere, and don't get particularly fearful. And as a result, you have, and look at this on the S&P here, 1 1 2 2 1 1. There's a lot of standard deviation moves here, all to accomplish really nothing. So in terms of option income strategies, for example, you have to put up with an awful lot of potential adjustments and movement, and you're not getting paid anything for it. So kind of keep in mind what kind of market environment you are trading in, whether you are an option trader, a swing trader with equities, or you're trying to do something with a core portfolio. An awful lot of energy, but spinning in its same place, much like a gerbil on a wheel. In fact, you look at the historical IV percentiles, it's in the bottom third for 2 of these 4 markets, and the others are in the bottom half. So despite the fact that we have a lot of energy not accomplishing anything of significance. That energy, though, certainly has had an impact on our status, and as we get into the daily report, a couple things to note. First of all, while we still have this as an intermediate term phase opinion phase 3, higher highs, higher lows, we have not yet set a lower low, nor have we had a recent higher high. This is really a range kind of activity. IBD status, no change here. Still uptrend under pressure. GMI index remains 4 out of 6. Active trader market posture remains moderately bearish. From a position sizing opinion, still calling for long side portfolio exposure up to 50%. I would actually dampen that down perhaps a touch, and you'll understand more in just a second. VIX, as I said, continues to be within this window of 12 to 18, so in a normal status. So that actually calls for more liberal position sizing. I think other factors are probably going to trump both of those opinions. Market timing opinion, 1-day outlook neutral, 3-day outlook neutral. We do have some seasonality coming into play with the first of the month and also leading into a holiday. April's normally bullish, but once you get past this holiday, the seasonality clearly falls off heading into taxes, so keep that at the top of mind. Market forecast opinion, this is moderately bullish. We are below 50 on 3 of the 4 indices now, so this is a very, very significant warning sign with respect to initiation of any new trades, whether they be short term or intermediate term. And frankly, if you're putting on a core portfolio position, that also should be probably taken with some additional caution. Notice in the hedge warning status, we have raised this up to level 2. This is what we call the red light. This amount of risk that is potentially in front of the market, we are in a situation where we could have significant weakness come in. Now, let's put this in perspective. We have been in a range. Oftentimes in recent weeks and months, just when you get to an elevated risk level, and we even had, I remember one time just a few weeks ago where we went to level 2, we literally had a false breakout on the bottom side for 1 day to just simply reverse and then take off back to the top side of the range, where it also had a false breakout just to come back into the range. So risk is elevated today over the risk that we had yesterday. It is in a situation to where we could break down and we could literally see 2030 on the SPX, or even 2000 or even more. And yet at the same time, it is not a time to necessarily just load up the puts and go all bear, because we are in a ranging market, and many of these have not led to any significant kinds of breakdowns outside of the established ranges. So does this become a breakdown of the most recent range to simply expand back into the prior range, and we just kind of get this complex pattern of a more of a 4-month range pattern as opposed to the last few weeks? That has yet to be seen, but you should be cognizant of the increased bearish risk. At the same time, don't go crazy with it. We did have a number of volatility-based warnings come back into effect with yesterday's close. Market and decline fired, sharp increase fired, distribution days, we added another distribution day, and this is really should be quite significant. The number of distribution days on the count now is 8 for both the S&P and the NASDAQ. That is not the sign of a healthy bullish market by any measure whatsoever. VIX phase we're calling neutral simply because it's been oscillating back and forth and not really breaking out either up or down. In terms of market postures, we mentioned we're now below 50 and moderately bearish. Notice the new highs, new lows. There were not a lot of new lows yesterday. Again, not a lot of extreme settings, and yet weakness. You had 2 days ago, of course, the S&P crash warning indicator fired, so that's also part of this risk factor. And then last, you have on the intermarket risk aversion indicators this key group of 5 indicators. All 5 of them are flagging risk off circumstances. So an awful lot of conditions coming together there. We have made some modifications to our opinions and the option income strategies. Obviously the VIX is inside the acceptable window, but we've had a significant number of standard deviation moves occurring in the last 2 trading weeks, and we think that probably mentions an increased risk about initiating of option income strategies unless you're really taking into account that kind of volatility and using Vega for your benefit. Covered call strategies, if you're going to have anything, it's going to be looking for an equal distribution between in the money and out of the money. Not advisable at a risk level 2 to initiate any new positions. Probably as part of that risk level 2 should be seriously looking at managing some of the positions that you're in fairly aggressively. And indeed, some of the things that I typically will start to do is, in addition to stopping all bullish entries, I'll start putting on a few bearish directional trades, and I have indeed already done that. I may shut down altogether some short-term bullish trades that I've already been in. I certainly will be reviewing all those today as part of my normal routine when we go to risk level 2. And then invoking long delta bearish hedging strategies. And indeed, I know I've already done some of that myself. Certainly I figured out my delta, my beta weighted deltas of my portfolio. I know what my risk level is, and I'm ready to act upon appropriate risk management techniques as a result of that. These are the kinds of things that you should be doing as part of your homework and preparation for trading when you have elevated risk conditions. So keep all those things in mind. In terms of performance yesterday, we had our market postures by sector. You notice again a lot more weakness, and again these lines have been relatively flat of late. So you flip-flop, you know, where it's a lot of green to a lot of red literally in a day, as we have been oscillating with these alternating up and down candles, and there really is not any significant trends in any of the sectors in play. Retail does tend to be the one that holds up the best, but you can still lose money. As you can see here, you know, every sector was down yesterday. So while one might be, you know, in a relative sense stronger than others, they all lose money in a bearish trend, and if that's what's going to develop, you've got to be very cognizant of that. So enough of that for today. Please do your homework in terms of understanding where your risk is in your portfolio. Examine each one of your positions, make appropriate decisions, and yet at the same time have caution about not overreacting, because while we have elevated the risk to level 2, you have to be aware that we are in a range-bound market, and we've tickled both sides of these ranges in recent weeks just to really, in the end, not go anywhere. Will this time be different? We'll wait for the charts to prove that and the price action to prove that, but we will be prepared to make the actions that are necessary. As always, we greatly appreciate you liking us on YouTube. If you find that what we're doing is valuable, your return investment is most appreciated. As always, greatly enjoy getting feedback. Support at falconglobaltraders.com. Website has more information about all the products available at falconglobaltraders.com, including our day trading products, daily price guides, as well as information on each of the 3 live trading rooms. Disclaimers as always. Hit the pause button if you need more time to read that. And then good day, good trading. We'll see you back here at the same place tomorrow.